Imagine a morning in the near future. You step outside, buy your usual cup of coffee, go to work, send money to your parents and pay your electricity bill, all with a single tap. No wallet, no card, no physical cash at all. Every transaction is recorded instantly with absolute accuracy. No fake money, no missing receipts, no unexplained payments. But at that same moment, you suddenly realize that none of your transactions are private anymore. Every small thing you do, what you buy, what you eat, where you go, is stored forever inside a massive digital ledger. This isn't a sci-fi movie. This is the future that the world is moving toward. Humanity is standing in front of a transformation that hasn't happened since the very first form of money was created. In the past, cash represented freedom, ownership, and personal control. But in the future, cash may become nothing more than a souvenir. Countries everywhere are preparing for a world without physical money. A world where every movement of money happens through digital signals, where data becomes more important than printing machines, and where central banks can see the health of the economy as clearly as looking at a CT scan. Cash has its advantages, but it also makes governments blind to many problems. They cannot see where money really flows. They cannot control the underground economy. They cannot measure consumer behavior in real time, and they must rely on slow reports that arrive months later. Digital money changes all of that. It allows them to see everything. For policymakers, this is a dream. An economy that is easier to guide, easier to correct, easier to... Imagine if financial authorities could immediately see whether people are spending more or less, which industries are slowing down, which businesses are struggling, and whether the speed of money is rising or falling. In the past, they needed 3 months of waiting. Now, they only need a few seconds. Economic policy no longer feels like shooting in the dark. It becomes something precise, like performing surgery with a laser. When the economy slows, they don't have to wait for quarterly reports anymore. Just by observing digital money flows, they instantly know that people are cutting back on spending. Lower taxes, cheaper loans, faster stimulus packages. All of it can be deployed tens or even hundreds of times faster because the data is already there in real time. A world without cash also makes financial leakage and corruption far harder. No more envelopes, no unexplained payments, no shadow transactions. Every unit of money leaves a trace. And advanced systems can detect unusual patterns automatically even when the numbers are small. This creates one of the cleanest financial environments the world has ever seen. When cash disappears, many forms of financial crime lose their hiding place. Money laundering becomes far more difficult. Suspicious transfers get flagged immediately, and illegal networks have very little room left to operate. With cleaner data and faster decision-making, the economy grows in a way that is faster, safer, and more efficient. Businesses access loans more easily. Cross-border payments take seconds. Money circulates quickly throughout society. Growth becomes something predictable, not accidental. But as always, everything good has another side. When every transaction leaves a digital footprint, a bigger question appears. Are we stepping into a new era of development, or into an era where every person becomes transparent? Are we gaining efficiency, or quietly losing our privacy? This is the thin line of the greatest monetary transformation in human history. But the moment we look deeper, the hidden side begins to show itself. In a world without physical cash, every movement of money leaves a trace. The system doesn't just know how much you spend. It knows exactly what you bought, where you ate, how you travel, when you are most active, and even the people you interact with financially. Convenience always comes with a cost, and the first thing we sacrifice is our privacy. In the past, cash acted like a shield that protected personal freedom. But when every payment is recorded forever, each of us slowly forms a detailed digital profile. And the strange thing is, this profile never disappears. It doesn't fade with time. It stays there permanently. Even something as simple as a meal you buy today can still be traced decades later. In a system where all money is digital, every account lies within a centralized structure. If there is a dispute, an investigation, or even just an error, someone's account can be paused, restricted, or temporarily frozen with a single command. It doesn't require long procedures or complicated paperwork. Everything happens instantly. For many people, that level of control feels deeply uncomfortable. When all spending becomes digital, it also becomes possible to apply rules or limits based on behavior. Certain categories might have spending caps. Some goods considered harmful to the environment could be taxed more heavily. Responsible spending may receive incentives, and algorithms might gradually influence how you use your money. Many researchers warn that this could create a society shaped not by personal choice, but by data and scoring systems. Today, we still have choices. We can use cash, we can use banks, we can use e-wallets. But in a world where physical money disappears, the only option left is a digital account. Some people see this as progress. Others feel it is losing something important, something that cannot be replaced once it is gone. Digital money doesn't just change how we pay. It becomes a mirror that reflects the entire structure of society. With complete data, analysts can see how public sentiment changes, how consumers react to new policies, how different generations spend differently, and how money moves from sector to sector, not just every month, but every week, every hour, even every minute. But this mirror has two very different sides. One side brings precision, clarity, and fast decision-making. The other side brings deep monitoring, detailed behavioral analysis, scoring systems based on spending patterns, and a gradual reduction in personal financial freedom. So the question returns again: is this true transparency or a new form of control? When all money becomes digital, enormous power is concentrated into the hands of very few institutions: central banks, government agencies, and massive data systems. A small change in policy can affect millions of people instantly. A technical glitch could freeze entire sectors, and a single decision can reshape economic behavior overnight. Even if the intention behind the system is good, the line between protection and overreach becomes extremely thin. With enough data, the system can predict your behavior, track your patterns, identify the places you go frequently, and even guess parts of your personality, all based on your financial history alone. So the final question we all must think about is this: will a world without cash make us more free or less free? Will digital money bring a brighter future, or will it slowly turn every individual into something transparent? Digital money can help an economy grow stronger, but it also challenges our deepest beliefs about privacy and personal freedom. The future of money will be a balance, or a struggle, between efficiency and human liberty, and which side wins depends on the choices we make today.